And his real focus is on silver. And he basically thinks that silver is going to rip the lid off of the market, as he goes on to say it is revising sharply upward in their mind, and that the technicals of both price and long-term momentum, he believes, are telling the market what is already occurring and what's about to occur. A repricing, he says, of silver's reality, whatever that means. So I've never heard him so bullish on silver. He was saying that if it follows the previous cycles of 2010 and 11 or 1979 and 80, you can get as high as $100 or $200 on this move. But it's interesting, if you take the 45-year cup and handle of silver, which is now literally almost a double cup and handle, and 45 years, one of the most powerful technical moves.
What if I told you that the London Bullion Market Association, the very backbone of the global gold and silver trade, may be just one day away from systemic failure? Andy Schectman, one of the most outspoken voices in the precious metals industry, warns that decades of Western price suppression are finally breaking down. And when the dam breaks, silver could skyrocket past $50 and head straight toward $100, $150, or even $200 an ounce. For years, investors have been told to ignore gold and silver, but now the U.S. is importing more gold than at any time since World War II. Silver has been reclassified as a critical mineral by Washington, and central banks around the world, from China to the BRICS nations, are quietly draining supply. What happens when the West finally loses control of price discovery? The answer could change the financial system forever.
Period. In technical analysis, the way that you would figure out where the next stop is and or where the target would be, and even if this analyst who was looking at it didn't know what it was, is you take the top of the cup in 1980, goes down to the bottom in the 90s to $4, goes back up to 50 in 2011, comes down and is making that final push. When it gets through that 50 level, you take the distance from top to bottom, which would be 50 to 4, that's 46, add it to the top, 50 plus 46, your next target's $96. That's what Michael is saying right here. 100 plus, he thinks, if compared to 2010 and 11, that's where we'd end up.
That'd be phenomenal. But do you think we're going to bounce off the $50 for a bit here, or are we going to just break right through it?
You know, the markets, for as far back as I can remember, find these big numbers, like gold at 2,000, and it would just keep hitting it and hitting it and hitting it. And when it goes through, it's gone. It just depends how many times does it take to challenge it. And I would argue that, 50 is just psychological. If you go back and look at 1980 and 2011, it was a cup of coffee long that it hit 50 for both times. And so what kind of resistance really is there other than, mostly psychological? And Kai, who the hell knows what real price discovery is in gold and silver? It's not even debatable that the central banks of the West have held down gold and silver for a long time. When real price discovery happens, because I believe that you can only manipulate a market for so long by pushing it in the direction that it is going. And it was easy for the West to do this for a long time. But you have a whole bunch of players around the globe that are coordinated, motivated, sophisticated, wealthy. They know what we're doing by holding down the paper price. They're standing for delivery, largely in London, in order to beat us at our own game. And now the folks in the West here get it. The big traders, either they were tapped on the shoulder and said, start bringing this shit back, pardon my French, and you can call it tariffs all you want to fool the public. It's not tariffs, it's about reshoring. Get it back. And that's what they're doing. Truly, that is what they're doing. And that's why I just think that it's easy for people like you and I and the people listening to this show, Kai, to get wrapped up in recency bias. We've been beaten up so badly over so many years in an environment that was counterintuitive to logic and our belief structure. But our belief structure and logic and mathematics have a way of playing out over time. You can't hide from math. And a lot of this is just simply math and logic, and it's finally playing out. I think the sky's the limit. So will it bounce through 50? Eventually. Will it do it first time? Maybe. Maybe not. It's irrelevant. I think ultimately sky's the limit once it does get through, though.
Yeah, it's like we often talk about the big picture. I want to get a tad more granular with you, just in terms of like U.S. economic data that's being presented to us. We just got ADP jobs report as well, plus the U.S. government shutdown on top of it. How significant is that for the markets and for what we're talking about here, gold and silver? What does it really mean? Does it trigger more safe haven demand?
Well, it should. I mean, I think what you can see by the the CPI numbers and the Bureau of, we should just call it the BS instead of the BLS, and their massaging of employment numbers is that, I mean, you take two things away. Number one, inflation is far higher than we are being told. Just ask John Williams of shadowstats.com. He'll say at an 8 to the 3% that we're talking about, that's 11%. And the unemployment numbers are far worse than we have been told. And it's interesting, they keep issuing these numbers. The market reacts, what a great economy we have. And then they quietly revise it down to the largest revisions ever. And, month over month, they're taking away, hundreds of thousands of jobs that we thought were created. No, not really. Our model was wrong. Sorry. But the market's already reacted. I think that it's becoming obvious that we are heading towards stagflation, which is a slowing economy connected to higher prices and inflation. And it's really the most painful part or most painful outcome. Higher prices, lesser and lesser growth. And I think it's a frightening realization that the job market truly is cooling down. And so now the Fed has to decide, what do we do? Do we lower rates? And if we continue to lower rates, what does that signal to the rest of the world? That we've given up on any hope of austerity. We just tighten a little bit and the whole dang thing blows apart. So are you going to sacrifice the employment market and then reignite the inflation engine when we haven't even hit our target for 53 straight months? And the number that we tell the public is a lie anyway. So what do you do? And this is the quandary that the Federal Reserve is in. And that's why I think you'll see what we see in Canada and in London. And that is a series of short, the front end of the market driven down through rate cuts. But the back end, no. We're going to go the other direction because we're not going to hold any duration treasuries of yours without a much higher rate. In other words, can the Federal Reserve, through yield curve control the back end? Sure, they probably could, which again is something that should frighten everybody. But if not, the market is going to demand much higher rates for the risk of holding our debt, which continues unabated. Our fiscal irresponsibility is just an absolute embarrassment. And creating still nearly $1 trillion every 100 plus days, that's not going to work for the rest of the world. And you get to a point where if Trump is able to lower rates on the front end low enough, you're going to get the very big money that is acquiesced to putting it into short-term treasuries, where now the rate that they are trying to get to of 2% on the federal funds rate is less than the CPI number of almost 3%. They will not stand for that. And there's your 1% running to gold. And we're already there from a real standpoint with inflation. The dollar's down 11% this year. So a 4% short-term treasury halfway through the year or 3/4 of the way through the year is giving you back 3%. The dollar's down 11. You're negative 8% real return. Gold and silver are both at or above 50% return for the year. This is the trend that we're seeing globally, where the biggest money is always 3 steps ahead of the crowd. They've been shorting or selling, pairing off their treasuries and buying commodities. This whole run up, when everyone else, you speak of vindication, when everyone else said we were stupid, I said, no, we're not stupid. Look what the most well-informed traders in the world are doing quietly before the rest of you idiots catch on. And I don't mean idiots. I just mean the people in the mainstream who laugh at people like us who see things differently instead of having an open mind and say things are changing and we cannot go around the world doing what we do and have massive fiscal irresponsibility without there being consequences. And you are beginning to see those consequences in the lack of demand for the U.S. Treasury. So I got a good idea. Let's come up with something called the Genius Act. And we can use that to fund the front end of the Treasury market with synthetic demand through stablecoin creation. I mean, we're getting to that last end stage game where things are things are going to start to get real interesting, and I think really fast also.
Absolutely. No, Andy, it's a perfect segue actually to my final question for you today is, like, what should new investors in this space do? We're seeing a lot of new subscribers here on this channel. We're seeing a lot new money flowing into this space. What's the best advice you have for them right now?
The best advice would be to not save in dollars, period. Assets are what will save you in this environment. And you can see that in just about everything. Now, real estate might be the one asset that I would not speculate on, certainly. But I do think assets are the place to be. Now, of course, my focus would be on gold and silver, the real value, and platinum. The real value is probably in platinum and silver, although the premiums on the pre-1933 gold coins are the lowest I've seen in my career. There is great value. The real value is in silver. The word is asymmetrical, low downside, massive upside. The LBMA is almost out of all of their free float of silver, which can just like that trigger contagion and a massive spike in price. Billions of ounces are coming, or dollars worth of silver are coming into the COMEX every single week, and the U.S. government just reclassified it a critical mineral. Food for thought, but it doesn't have to just be in my universe. I'm sure there are a lot of people out there who would want to look at cryptocurrencies as a way to shelter from a devaluing dollar. The bottom line simply is this, is that if you are saving dollars, you have a very high probability of going broke in terms of your purchasing power. We've seen that already with 11% decline, but look at what Stephen Miran, the architect of the Mar-a-Lago Accord, who is now on the Federal Reserve and is still an advisor to Trump, his whole idea is to devalue the dollar in order to reshore gold. What did Vice President Vance say? To reshore manufacturing, excuse me. What did Vice President Vance say?
Silver's setup today is unlike anything we've seen in decades. Andy Schectman highlights the 45-year cup and handle formation, one of the strongest technical patterns in history. In past cycles like 1979 to 80 and 2010 to 11, silver briefly touched the $50 mark before exploding higher. Analyst Michael Oliver calculates that breaking through $50 today could launch silver directly toward $96 an ounce, with momentum carrying it much higher. But this isn't just about charts. Schectman stresses that for decades, Western central banks suppressed gold and silver prices using paper contracts. That system worked while the world played along. But now, BRICS nations, China, and even Western insiders are standing for physical delivery. The London Bullion Market Association, home to the world's largest bullion trade, now holds less than 1 day's worth of platinum and silver inventory. A single large delivery request could trigger a chain reaction of defaults that puts some of Europe's largest banks at risk. At the same time, the U.S. economy is sliding into stagflation, slowing growth combined with rising inflation. The Federal Reserve is trapped. Cutting rates risks inflation, but raising rates risks a collapse in employment and treasury markets. Meanwhile, Washington is adding nearly $1 trillion in new debt every 100 days, destroying credibility. The dollar has already fallen by more than 11% this year, leaving Treasury investors with negative real returns. Big money sees this and is moving, rotating out of U.S. debt and into commodities. Gold and silver have already returned over 50% year-to-date, proving that the smartest traders were positioned early. Schectman's advice is blunt. Do not save in dollars. Cash is a sucker's game when your government openly talks about devaluing the dollar to reshore manufacturing. Assets are the only defense. Gold, silver, and platinum are his primary recommendations. Silver, in particular, is what he calls asymmetrical, with limited downside but massive upside. And the signs are everywhere. The U.S. has quietly become a net importer of gold for the first time since World War II, with over $150 billion worth of gold flowing in since last November. Much of this accumulation avoids IMF reporting, coming in through sovereign wealth funds, proxy banks, or even in concentrates that don't trigger official data. Schectman believes this could even involve the U.S. Treasury, using secret channels to rebuild reserves ahead of a monetary reset. Globally, gold is being reintegrated into financial systems, from China's digital yuan to gold convertibility through the Shanghai Metals Exchange to Saudi Arabia's construction of new gold vaults under Belt and Road initiatives. And in the U.S., silver's reclassification as a critical mineral signals an official acknowledgement that it isn't just a precious metal, it's essential to national security and industry. For the first time in decades, policy wins and market momentum are blowing in the same direction: higher prices for precious metals.
Triffin's dilemma, being the world reserve currency, is no longer a good deal for us. It is a subsidy on the consumer and a drag against manufacturing. It's really not a good deal for us. What does Trump say about a strong dollar? Sure, it's great, but you sure don't do a lot of business or have a lot of tourism. They're telling you they want to devalue the dollar. It's the only way to pay off the debt. It's the only way to have any hope of manufacturing success. It is the only path left to take. Now, there's other stuff to that when next time when we get more time, we'll talk about it. But a devalued dollar is in the cards, and so do the best you can to accumulate assets, whatever that means to you. Stay away from holding your wealth in dollars. It's a sucker's game right now. You can be right based upon economics and logic and be wrong for a long time, because people that have been using suppression to hold down these markets, these are very powerful folks who have now gone the other way, and they're like, no, I think we're going to go long and stand for delivery. There are different things happening, different dynamics, I believe, that will make you look right in spades before it's all said and done.
Let's break down, like, who's actually buying gold right now. Like, when you look at it, like, before it was the central banks. I think we've talked about that ad nausea. But who's really pushing gold now to 3,900, 3,915, I think, in the futures for December right now as we speak here, Andy. So who's the real buyer right now?
Well, I mean, there's no question that it's still the continued main characters, China and the BRICS nations. But what's vastly different, is you have the most well-informed traders here in the West, in the United States, that are standing for delivery to the tune of billions and billions and billions and billions every month. And the question that you ask is one that should really be thought about. Who the hell is buying all of this? Every month we're seeing billions and billions and billions every week come into the COMEX. And, guys like Vince Lancy, who are no dummies, and he's a smart dude, one of the smartest in the industry. And he says, look, 85% of the gold that's being bought by the central banks is not being reported to the IMF. They're bringing it in ways like China going in and buying doré and concentrate, as Sean Kunkun will tell you from Dolly Varden, from all of the miners in Latin America and in Mexico, pulling gold and silver out of the ground before you even call it that, because it's in concentrate and doré form, shipping it back and refining it themselves. Well, that doesn't trigger IMF reporting. It's under 999 fine. Or buying it from other locations around the globe through maybe proxy banks or sovereign wealth funds that don't trigger it, and using artisanal and local miners, and bringing it in not through the central bank channels, so it's not reported. All I'm saying is that the biggest money in the world has been doing this for a long time and getting more creative in the way they're doing it. But what is different now is that who the hell's bringing it into this country? If I had to guess, now again, could be a guess, I would say it's the Treasury Department under the guise of the Exchange Stabilization Fund, where it can be quiet. Don't tell anyone, it's for national security. And now I think you should interview Tom Luongo as well. He has a very interesting take, and that is that Trump understands or believes that it is the European aristocrats who were behind any perception of election interference and a color revolution in this country during the previous administration. And he's out to get the Bank of England and those banks who are massively short in London. Now, all the gold that's been coming back, could it be that it's been covering the short positions of the banks here in the States, who, when they short on COMEX, they go long in London, they bring it back, they call it tariffs? It's not tariffs. It's never been about tariffs. It's been about reshoring. So maybe if you want to walk that fine line of conspiracy and reality, and this is coming more from Tom than it is from me, but I think it's a very intriguing idea, is that all that gold coming back, maybe it's being used to cover the short positions of the banks in the States, with the idea that it's going to go to the Treasury in terms of their gold acquisition for whatever their plans are with gold revaluation or pegging it to the bond market, as I believe, and to cover their balance sheet. And we're this close away to some sort of a systemic moment in London where the inventories, in particular of platinum and silver, are down to less than 1 day's worth of trading. And if these continued delivery requests happen, you're talking an existential threat for some of the biggest banks in Europe. And Trump is out to get them, is what Tom is saying, out to get the Bank of England and out to get these aristocrats that are the bankers in Europe, by having some form of a delivery default in London that would very quickly trigger a systemic chain reaction that could bring down some of the biggest banks in Europe, as the banks in the United States have quietly covered. Now, could that happen? Don't know. All I'm telling you is the amount of gold coming into the COMEX every single week is unlike anything anyone has ever seen, and we are now net importers of gold for the first time, really, ever, other than World War II, when everyone sent us their gold as part of the World Reserve Standard. And, since then, maybe 1 or 2 months here and there, but every other, the trend has been net exporters for the United States as far as gold is concerned. My whole career, which is going on 36 years.
It's interesting because I think it was in March or in April, I may stand corrected here, but the U.S. imported so much gold that it actually hurt the trade balance. Right. And Trump wanted to put on tariffs on gold imports from Switzerland. I remember that. So it was like my follow-up question there to you, Andy. Like, wouldn't that be showing up in the trade balance? I think we got numbers for August just recently as well. When it comes to those gold imports, wouldn't they be showing up there?
Well, some of it is, sure. Some of it is. And that's why I go back to what Vince is saying. How much of it is coming in ways that doesn't trigger it that way, using proxy banks, using sovereign wealth funds? And the interesting thing about it is that, when you talk about the worthlessness of the mainstream media, who really hasn't done anything in this country but foment divisiveness, I mean, you would think that when the United States becomes a net importer of gold, going back to any time since World War II, where the amount coming in is that we know of north of 150 billion since November. And there's a lot more in that coming in. But the questions aren't even being asked, who's doing this? And although obviously markets are meant to have anonymity attached to them, but where is really mainstream? Why is it that you have to hear from alternative media that this is going on, and what does it truly mean? I would guess that some of it has shown up. To your point, it did show up, but not all of it is being reported. If the idea was to use gold and reintegrate it into the monetary system, we're seeing it across the global south. We really are. We're seeing it massively being reintegrated into the plans, the settlement system of the Shanghai Metals Exchange, expanding their vaults throughout the whole Belt Road Initiative. The first one was built in Hong Kong. The next one is under construction in Saudi Arabia, so that they can trade their local currencies over the M-Bridge technology and settle imbalances like that in gold, where China has now, in an effort to internationalize the yuan and the Shanghai Metals Exchange, made digital yuan immediately convertible into gold, not converting back to dollars. This is going to be the rails of their payment system. I believe that gold will have a different role in the United States, but equally as compelling in terms of its monetary future. And any way you look at it, I just think that gold will be reintegrated into the monetary system. And the fact that the government just made silver a critical mineral here in the United States, we're seeing massive amounts of silver too, like literally billions and billions and billions and billions and billions every week coming in. And now it's a critical mineral. They just put a floor under the price as far as I'm concerned. Things are different, Kai. For the first time, the focus isn't on U.S. treasuries. In fact, the people who promoted it are saying maybe back off and buy gold. The focus isn't on these traditional assets that are now changing, and it just feels different at a level that would perpetuate legitimacy, that would accentuate legitimacy instead of fighting against the wind forever. It's like we got the wind at our back right now from the highest up of the food chain in terms of finances. And it's probably in some passing, and nothing substantial. You talk about momentum. Michael Oliver is a very interesting man, and he focuses primarily on momentum in a technical respect. And he said that gold has just blown through a channel, if you will, a annual momentum channel that was broken last month, and he would expect this month, which is ending today or tomorrow, to see another all-time monthly high, as we've already just beaten the intra-month high. He thinks it's just beginning.
So what does this mean for you? It means that if you're sitting in cash, your wealth is silently evaporating. The dollar is being deliberately devalued. Treasury bonds are offering negative real returns. And the system that has suppressed silver for decades is breaking apart. Andy Schectman's message is clear. The LBMA could face a delivery failure at any moment. If silver breaks through $50, history shows it won't pause. It will surge into triple digits before most people even realize what's happening. By the time CNBC or CNN tells you silver just hit $100, it will already be too late. The question is simple. Will you be positioned before the headlines, or will you be chasing the move after the fact? Protect your wealth with real money, gold, silver, platinum, before the system forces you into it. These aren't just investments anymore. They are lifeboats in a storm. If you found this breakdown valuable, hit the subscribe button, turn on notifications, and join us here at Macro Edge as we track these historic shifts in real time. The financial reset is coming, and precious metals will be at the center of it. Stay informed, stay prepared, and never underestimate how quickly the tide can turn.